Deutsche Bank's winning streak snapped. Deutsche Bank, a titan of German finance, was on a roll. For 15 straight quarters, they had been raking in profits quarter after quarter. This winning streak was a beacon of hope, signaling that the bank had overcome past struggles and was back on top. Investors were optimistic. The future looked bright. But then came the bombshell. Red ink flows a surprise loss stuns investors. The second quarter of 2024 brought with it a shocking turn of events. Deutsche Bank announced a net loss of 143 million euros. This unexpected loss brought their impressive profit streak to a screeching halt. Investors were caught off guard. The news sent shockwaves through the market. Share price takes a tumble. As news of the loss spread like wildfire, panic selling ensued. Deutsche Bank's share price plummeted by 6% in early trading. Investors, once confident, were now scrambling to cut their losses. The drop in share price reflected the severity of the situation. However, as the day progressed, the share price recovered slightly, closing 4.5% down. This suggested some investors were willing to hold their nerve. Inside the numbers. What went wrong? The earnings report revealed a complex picture. Deutsche Bank's revenue told a different story. It had actually increased by 1% to 6.3 billion euros. This growth was driven by their investment banking division, which benefited from a surge in trading activity. So why the loss? What was dragging down the bottom line? The legal hangover lawsuits bite back. One word: lawsuits. Deutsche Bank had been bracing for a hefty legal bill, and it finally came due this quarter. The bank set aside a massive 574 million euros to cover potential legal costs, primarily related to a long-running lawsuit involving their subsidiary, Postbank. This provision for lawsuits was the primary culprit behind the surprise loss. A mixed bag division performance. While the overall picture was bleak, a closer look at individual divisions revealed a more nuanced story. The investment banking division, as mentioned earlier, performed well, exceeding expectations. Their fixed income trading desk, in particular, had a stellar quarter. However, other divisions, such as asset management and retail banking, faced headwinds. Overall, the picture remained uncertain, with some areas of strength but also significant challenges to overcome. European banks. Feeling the heat, Deutsche Bank wasn't alone in its struggles. Across Europe, banks were grappling with similar challenges. A sluggish economic environment, coupled with rising inflation and interest rates, put pressure on profitability. Several other major European banks also reported disappointing earnings this quarter. What's next for Deutsche Bank? The big question now is, can Deutsche Bank bounce back from this setback? The answer remains uncertain. The bank's leadership expressed confidence in their long-term strategy, emphasizing their commitment to cost control and growth in key areas like investment banking. However, the legal challenges remain a concern. The outcome of the Postbank lawsuit, in particular, could have significant financial implications. Analysts are divided in their outlook. Some believe the bank is well positioned for a rebound, while others remain cautious, citing the uncertain economic climate and ongoing legal risks. Only time will tell what the future holds for Deutsche Bank.